All right, welcome everyone. Doug here with thelincolnlist.com. Today we're going to talk about what it takes to build a winning strategy, the kind that works in just about any market, and the one that will allow you to live a long, healthy, and happy career as a stock trader. Now, I've often spoke my thoughts and feelings about strategies before in a lot of these whiteboards, and I think it's just a very small piece. And I'm sure you understand that as well, a very small piece of what it takes to actually become a profitable, long-term successful trader. To me, the bigger part of being successful, obviously, is how you control your emotions and risk, etc. But we all do need a process, because a process keeps us from guessing. It allows us to manage our risk. So let's talk about what we actually need to build a successful process. Now, to make this easy, there's only three types of trades that you're trading at all. If you're a technical analysis trader, day trader, or swing trader, momentum trader, doesn't matter. But in theory, there are only three types of trades. That's it. And those three types of trades are the breakout, the breakdown, and a reversal, or some form of a reversal. Now, there probably is 100,000 different ways for you to trade them. But if you think about it, in theory, that's what we're all trading, right? We're either trying to capitalize on a breakout, take advantage of a breakdown, or we're trying to capture alpha via a reversal of some sort. And again, there could be 100,000 ways to do each one of them. Now, is there a right way to do these and a wrong way? Well, the answer is no, because every trader is going to be different. The first thing that you have to do is figure out which one of these fits your personality. Most of you know me that my favorite kind of trade is a reversal trade. Now, I often trade breakdowns and breakouts, but I really don't prefer them. Does that mean that they're terrible and traders can't make money? Hell no. There's a lot of traders that do real well for them. But for me, the way I trade, what feels right for me is reversal. For you, these may just be terrible. They may suck. You may not be able to ever figure this out or understand it. Again, it doesn't make you a bad person, doesn't make you a bad trader, but what you must do, step one in your process, is to figure out which one of these is your main objective. Now, once you've done that, the second piece to that is how do you want to go about trading it? Now, that will be the difficult part. As I just mentioned, there's probably 100,000 different ways that you could trade these. So maybe, let's say, for example, you're a breakout trader. I'll give you an example for some of the new people. And these are my little candlesticks. Let's say you got a nice little breakout here in the morning, and then the stock kind of just pulls back and bases just a little bit. Excuse me, these are my candlesticks. So if you're a breakout trader, there could be two types. Some breakout traders will buy it as soon as it shows a little bit of life outside of this consolidation, far ahead of the breakout, while other traders will wait for the thing to actually confirm its breakout before buying. Now again, is there a right way to do it and a wrong way? No, but there are advantages and disadvantages of both, which is something that you, the trader, will have to figure out what fits you and your personality. For example, a trader that does not wait for the breakout will probably have a higher losing rate because they never waited for the confirmation. However, the stocks that do break out, they'll be able to capture more because if it does run, they were in it way early. Now, versus the one that waits for the breakout, they have confirmed that there's a breakout, but they probably won't be able to capture as much premium to the upside. Again, it all matters about the trader, their behaviors, and what they actually get along with. Now, the next step that you're going to have to do with figuring out your strategy is anything that you have. Let's give it what it has to have. Is what we call an edge. I actually wrote this 55% here first. When you do your strategy, as long as you have something that gives you more than a 50% chance of winning, I like to say 55%. If you have that now, you have a winning strategy. This gives you an edge over the market. That means that most of the time that you have a trade idea and you follow that trade plan, that trade is most likely going to be a winner. Now, in the beginning part of your career, if you think, well, I don't know if I can make money on 55%. Well, you can't, because if you win more than you lose, technically you should make money. If you don't make money, that means you are allowing the winners to be far less than what your losers are. Again, a completely different topic that falls more under the level of motion. But this is what you're going to have is that edge over the market. So if you currently have that, I don't care what someone else is telling you about trading strategies, because this is what you're getting every day. Is somebody's always telling you, my strategy's the best. My strategy's the greatest. This is how you should do it. No, it's not how you should do it. How you should do it is what makes you feel right and what you can understand. Now, there could be a trader out there that could show you how to do it, and you say, yes, I see that. I understand how you do it, and then you make it your own. That's what we always teach at the Lincoln List. But remember, if you have something that's 55%, you're on the right track. Now, with experience and time, that strategy will get a lot better. You can get these numbers up to 65 to 70%, which is where most professional traders are. So my point in this whole thing is no matter what you decide to do, whether you're trading a breakout, a breakdown, a reversal, or what indicators you're using to make those decisions, of the thousands of traders that I met, many that are very successful, none of them are really winning any more than 65 to 70% in most cases. So regardless of whether you're doing, the averages are still the same. It's all how you manage it. Now, the next piece of what that strategy has to do is we talked about guessing, okay? There are two other things here we'll just talk about in the final piece. What that strategy really does for you is it keeps you from just guessing. So if you see something on the news tonight and there's a professional, let's say, professional with the tie, and they say, you know what, Facebook's going higher. We see Facebook going a lot higher. So the first thing you do the next day is Facebook's up $4 or $5, it gaps up on the news, you buy it. Then it spends the rest of the day going down and you can't figure out why. Because that's not probably the right price to buy it for the short term, or it's not of an attractive price. There's probably a support and resistance number there or something that caused the rejection in that. So what a process or a strategy allows you to do is stop guessing. And when you stop guessing, it allows you to control the greatest element of what makes somebody successful, and that is the risk, okay? Your strategy has to give you an entry point, which takes away guessing, and help you manage risk. Now, you can also put on there a target, which we kind of touched on just a second ago, right? When I mentioned if you win 50, 60% of the time and you still can't make money, that's because you're not allowing that strategy to play out and reach the target. So kind of to make this quick and easy, so I don't get everybody too confused, the main benefit or the main usages of that process or strategy is it takes away guessing, allows you to control the risk, and helps you figure out what your target should be so you can make the most amount of money on those trades. So remember, we're not doing anything fancy here. Nobody's coming out with a secret strategy or something that's any variation out of this theory. What happens is how you are able to take that strategy, figure out the best way to get an entry, figure out the best way to control your risk while maximizing your profit. Sounds easy, right? But 90% of the people who try it can't do it. Now, if you need some help with that, you have some of your strategies of your own you need help tweaking, just send me an email, support@thelincolnlist.com, or just visit thelincolnlist.com. Until the next lesson, thank you.